Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of the Real Estate Investing Club. Today we have Sam Wilson with us. Sam is the founder of Brick & Investment Group. They are in many things, including retail, parking, multifamily, RV parks, single-family homes. So we have a lot to talk about today. I'm super excited, Sam. Thank you very much for hopping on the show.
Hey, Gabe. Thanks for having me. The pleasure's mine.
Absolutely. I told you before we hopped on here, we like to start with stories. We like to hear how you kind of got started. So why don't you take us to yours? How'd you get started in real estate?
Man, I fell into it. I sold a business in Indiana, and I didn't know what to do next. My wife is from Tennessee. We headed south. And how did that happen? One day I found a foreclosure listing, found out the auction was 2 hours later. I went and looked at the house, and then 2 hours later I owned a house. I paid cash for a house, the courthouse steps. Did zero title work, had no idea what I was buying, made a pile of money on it. I said, man, if I can do it once, I can just keep doing this. And so
man.
9 years later, it was a business plan hatched in 120 minutes. Like, oh, we'll go buy that and make money on it. 9 years later, it's the only thing I do for a living is real estate. So
I love it. I love it. I always hear people, they fall into it one way or another, but falling into it within 120 minutes after looking at an auction, that's a new one for me.
I did everything wrong, right? I did no title search. I could have been the proud owner of a second mortgage and a whole bunch of IRS tax liens and everything else. Again, what you don't know is what you don't know. And I got fortunate on the first one. Of course, there's a lot more things I would say that you should be doing before you go buy a house now. But
luck is half of everything, and it sounds like you used up a lot of your luck at that first deal there. So that's great.
Was it better lucky than smart or something like that? I can't remember how the statement goes, but yeah, that's exactly what happened. So yeah, it was fun, man. It was fun. All we do is commercial now, but we did residential for a long time. Did a ton of fix and flip, rental properties, all creative strategies and financing, you name it. And then, just said there's got to be a bigger, better way to do this. And then moved into the commercial real estate space. Perfect.
I love it. Why don't you take me a little bit further into that? Because that does seem to be the trajectory of a lot of investors that I'm talking with that are in the commercial spaces. Even myself included, we start in single family. I started with wholesales, maybe do a few flips, and then we graduate, quote unquote, to commercial when you don't really need to. You can jump straight into commercial. So take me kind of into your story. How did you get into commercial?
Yeah. So went to a conference with the sole objective of determining what my next move was. Because I was done with them, just bored. I was bored to tears of single family. I was overworked. It was hustling for a paycheck. And I went to a conference with the sole intention of finding my next asset class. Listened to a guy give a talk, and I'm like, hey, that's really cool. And it was in the parking industry. And so what I did was I just went to him and said, hey, man, how can I add value to you? I want to learn the parking industry. You're the only person I've ever met that's in the parking industry. How do I learn this? He kind of blew me off for about 5 months, but I kept pestering him. And finally one day he said, hey man, fly down here, meet me in this city. I'll show you how the industry works. And then what you're going to do is you're going to go out and find deals, and then we're going to split it down the middle. I'm like, done, sold, great. I get you looking over my shoulder. I can learn from you and I can bring value to you, which is the one thing I would tell your listeners. If you're looking to scale into something, first thing you want to do is find somebody that's ahead of you and either A, find a way to add value to them, or hire them as a mentor, however you can do it. So, my mentor caveat there is that never hire the guru, but no do. Like, they need to be somebody actively in the business doing what you want to do. And you want to find a way to, like I said, add value to them or bring them on as a mentor in some capacity. And that's what I did.
Yep. No, I love hearing that. And that, I feel like that applies even when you're, you have experience, even when you're getting into a new asset class. Every time you change small things about your business, finding a mentor who's already doing that thing is so important for not making the mistakes that you're sure to make if you're going in blind.
For sure. And that's exactly what we're doing right now. Taking that transition again. I've owned a lot of different commercial assets, everything from multifamily, storage, boat and RV storage. We're going long in the RV resort space right now. And it's one of those things because there's enormous tailwinds, as you know, Gabe, as an investor in this space. There's enormous tailwinds to it. But one of my sole objectives here this year, because I said, look, this is where I'm going long. I see huge opportunity. I'm pushing everything else to the side. I'm not looking at any more multifamily. I'm not looking at anything else except for RV resorts. Okay, going long in this, my first step was to find a group that's ahead of me. So I went out and I found those partners that are they're not light years ahead of me, but they're a couple deals in a bit more organized than I am in the space. And I'm like, hey, I want to find a way to bring value to you. So it's a wash, rinse, repeat model for me. Went out and found a deal. We're going to take it down together. The splits are a little bit different. Maybe we're not doing it halvesies anymore because I know a lot more about commercial real estate maybe than I did 4 years ago. But bringing deals and then helping them take down some of their deals they've got in their pipeline as well. So it's a win-win for all of us in the opportunity. So that's exactly right. Go find somebody else that's ahead of you.
Yeah, man, I love it. Yeah, I mean, I told you before we got on here, I own a couple RVs, and I'm always curious, people who are coming into the space, what is it that you see in the asset class that you are excited about?
Well, one, I'm an RV owner. I'm an RV owner with kids. I know that
nice.
When we leave the city, like, we're driving the RV. I don't care if we're staying in it or not. If we're going to see family, we're driving the RV. Like, it's and this doesn't fit the RV resort thesis as much, but I just know that the industry is exploding, right?
Yeah.
We had a 40, I can't depend on which stat you look at. We had 600 and something thousand new RV deliveries in 2021, up from like somewhere in the 350,000 range in 2020.
Oh,
we're going to see that again.
That's almost double. Wait, that is double, isn't it?
No, it's 350 to 700 be double. So it's 600. It's like 43.5%. Some rough. I mean, again, there's different stats to give or take 20,000 deliveries. But with just the delivery stats alone, it's like, oh my gosh, there's enormous tailwinds to this space. The other thing is that the largest RV group owners of RV are millennials. It's millennials with kids. It's not your grandparents traveling on a national park tour anymore. It's like, oh wait, this is becoming more mainstream, especially for the younger generations that can work remotely, take their kids to an RV resort, hang out for the weekend. They're not worried. They can get on Wi-Fi. They can do all their work. It's a place where they want to go and spend time, and it's also on a probably on a per weekend basis, a lot less expensive of a vacation maybe than loading everybody up in an airplane and flying to Disney. So yeah, lots of tailwinds just on the delivery side. The old stats was something like, and again, these are rough stats, so don't hate me if it's not perfect, but it used to be like 2 RVs for every 1 RV park site across the country. Well, now that number has changed to more like 4 to 5 RVs for every 1 RV site across the country. It's like, wait, oh my gosh, that means in theory it's severely undersupplied. We'll see if that holds true, but all of those things, it has tailwinds to it, but also the going in cap rates on the buy side are just so much more favorable than what you're seeing even in mobile home parks. Yes, it's more operationally complex. Yes, it's more of a business and less of a real estate play, but that just means there's more levers for us to pull to drive revenue. So that's why we're excited about it. We see great tailwinds in it. The younger generation being the ones that are using it tells me that there's runway to it. I got an article the other day that said 60% of RV owners, and this includes me, I'm in that stat, are looking to upgrade the size and type of RV they're driving. Not looking to sell it, but looking to buy a newer, bigger model. Right. Which is like, 60%. That's wild. That's wild.
That's a lot of growth there.
A lot of growth. Right. So there's a lot of things going on there that are exciting for us. Obviously, you're aware, Gabe, it's largely a fragmented industry. It's mom and pop.
Mom and pop is good, especially for off-market marketing, because that's where you get the deals. And that's where you get seller financing. I preach seller financing every time every opportunity I can, because if you can negotiate seller financing, it's just so much easier, and you generally get a better return on the cash flow side.
Correct.
So mom and pop RV parks. I love where you're going with this. I'm sorry. I'm getting too into it right now.
No, man. I'm glad to have a fellow investor, and especially again, you're somebody that's ahead of me in the game. Just confirm what it is that I'm thinking. I mean, it's like, and it's. I don't think it's theoretical at this point anymore, because again, my partner's already owned some stuff, and it's like, okay, we already kind of have the inner workings done. It's like, okay, this model works, but it is mom and pop owned. I mean, one of the deals I just inked here a few days ago, they're doing a seller carryback on it, not the whole thing, but a good part of it. It's like, well, gosh, there's $500,000 or $1 million in equity I don't have to bring to the table or raise from investors. Beautiful. Like, this is awesome. And the other thing is just the operational inefficiencies are astounding.
Oh, yeah.
I mean, I don't know. Are you seeing things like dynamic pricing not being part of the program?
Yeah, definitely not.
No, right. I looked at one of the parks we're buying, and they have there's 72 short-term rentals on this thing between a mix of a 40-room motel and cabins and floating kitchenettes and all these really cool things. The same price on April 4th. You pay the same price on April 4th as you do on July 4th weekend.
Oh, wow.
Like,
yeah. They should they're just not taking a hint from the, hotel motel industry. It's like
hotel, motel, airlines, Airbnb, all of it has dynamic pricing. Not that hard to implement. Again, well, we'll get to it when we get to it. They're slam full in the RV park for the entire season. Like 100% full. Well, we're going to build more sites when we get the rest of our capital improvement projects done.
It's like, come on, man.
You have the land. You can add sites now. Like, you don't have to wait. Like, you're just... I always think of the Saturday Night Live, Sean Connery, when he's like, "You're sitting on a gold mine, Trebek." It's like, what are you doing? So that's the stuff I'm seeing, man. I
like bringing in the Sean Connery. That was good. But that was the other thing, is that construction cost is a lot lower for RV. Adding additional RV sites is substantially lower than you would be, if you're adding multifamily, retail, something like that.
Right. Tell me this, and maybe you can confirm the numbers that we're putting together. I know this is very regional, but there's got to be a number you're plugging in your spreadsheet. I'm just going to ask a direct question. What are you finding is the cost per site right now to budget for new site development?
So we haven't budgeted new site. We for the two that we own, we just bought straight up as it was, just because it was on septic, and the footprint of the park wouldn't really allow additional septics to be put in, and so we couldn't really expand. There's room acreage wise, but there's not room, drain field, septic wise. So that one, both of them are pretty limited. So I don't know that number, but I would guess it's no, I don't even want to guess. I know it's low, but it's lower than multifamily, that's for sure.
Oh, for sure. Yeah. I mean, numbers I've seen have gone anywhere from 20. I mean, I'm underwriting it at 35 grand just because it's like, well, we'll just plug a fat number in there. Yeah, way overshoot the runway, and if we come in $12,000 or less per site, then great. But I was just curious to see where other people were finding maybe that number fell. But anyway, we digress into a serious nuance.
Do you guys, and we're just this is the last question in the RV space, and then we're gonna move on. But do you guys focus only on short-term stay, or do you also focus on long-term stay RV parks?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
That's a great question. They're all going to have that mix. It's going to be long-term and short-term. So for us, we're looking to buy RV destinations. I want to kind of drop
resorts.
I want to drop the word park out of my vocabulary, because I'm not buying a roadside park. I'm not buying something in the interstate of Kansas where people pull off and spend the night and keep moving. We want an RV resort.
Yep.
What we're seeing right now, everything has about a 70% long-term component to it, with about a 30% transient. We're trying to reduce that number, especially as we can bring in things. Again, many of these don't have a website, no online booking, things like that. We want to reduce that long-term component and really cash in on the shorter-term stays, because obviously your per-night stay is worth a lot more than an annual contract on a spot. So that's where we're going.
Perfect, man. All right. Well, that is awesome. I'm glad to hear, you're another RV investor. I am going to move us on a little bit because we're shooting through the time, and I have a few questions that I want to ask. Going back, you mentioned parking. We're not going to stay on this one too long, but I just want to know about the parking industry. You're the first person I've heard who invested in parking lots. So how does that industry work? Like, how do you buy a parking lot?
Boy, it's a complete. It's a lot. There's many parts of it that are similar in the fragmented industry side of things, like RV parks. It's not operationally complex. It's very easy. It's one of those things where you buy the lot. Surface lots are a gold mine, generally speaking. It is very laser focused, though. It's something I put a YouTube video out a couple years ago, just doing a walk around here in Memphis. There's one lot that's literally 200 yards away. They're 200 yards apart. One offered 1.2 million for, and the other I wouldn't even give him 15 grand for. It is that hyper focused.
Oh wow!
So you
Just because of location?
That's it, man. One's off the main drag. People want to park there. It's close to the businesses. It's close to restaurants. The other was down a side street. I mean, you literally can stand in one lot and look and see the other one. Not far, 200 yards. And I'm like, I don't even want it. I can't even cover taxes on that, let alone, turn it into a parking asset. And then the other one, I'm like, dude, he wouldn't buy it or wouldn't sell it to me for 1.2 million, which is just hilarious. So it's a very laser focused business. But once the hard work in parking is actually finding the assets, getting them underwritten and acquiring them. Once you have them, you plug them into a third party operator, they put an ACH in your account once a month and your phone never rings. It's a beautiful and that's one of the very attractive parts of it is it was very hands off. I mean, I was like, well, and your insurance was dirt cheap. I mean, it's like a few $100 a year for a
What can go wrong in a parking lot?
What's it going to do? Flood? I'll wait till the water goes down. Like, I got no risk in this. So, but with that also came compressed cap rates on buy. I mean, if you're getting an 8% cash on cash return out of a parking lot, you're doing well. And that was the other kind of thing that I found difficult was that it was tough to get investors excited about that. It's tough to get me excited about it. Like, okay, 8%. I mean, to a lot of people, that's really good. But to those of us who are used to things in the double digits, that's like,
can't get
whatever.
excited.
Yeah. And then to project I'm probably too concrete in my thinking, but to project an exit, which your big exit in a parking lot, of course, it's a covered land play is basically what it is you're going to hold it for redevelopment or obviously sell it off to a developer, but you can't project where that goes. So you can't really underwrite development. You can't underwrite that, hey, in 3 years, we're going to sell this for, 10 million more than we paid for it. You don't know. There's just no tangible data to kind of make those assumptions in your underwriting, which means that, hey, the best we can do is an 8% return and we're going to hold it for as long as we hold it. And people just kind of get bored with that pitch. So it had some headwinds to it, but certainly is a fun industry.
Yeah, makes sense. And I mean, parking lots, that's where you started. But you've gone to so many different type of asset classes. Why was there a reason behind all the bouncing around, or you just really like the variety?
One, I do like the variety. Two is because I'm opportunistic.
Yeah.
So one of the things that I've found, and this is kind of a model, but I take a spin to it, or at least I think I take a more educated approach to it. Obviously, like you've got a lot of friends in the business. My theory is that especially in multifamily, like as opposed to me going to whatever city it is, let's say it's Winston-Salem, right? As opposed to me going to Winston-Salem and doing all my own direct marketing and trying to find the assets, I got enough friends that are already buying in Winston-Salem. Like, hey guys, instead of me putting their line in the water, just call me when you got a fish in the line and I'll help you reel it in. Like that's a far more scalable model than me just going out and competing with all my friends in the same business. And so that's the way a lot of these assets came to me. The other thing it does, it allows me to vet a lot of different deals that, it takes a long time to get all the way to, hey, we've got a contract, here's the opportunity, right? That's a ton of work. But if I can have 20 people doing that as opposed to just me doing it, then only the best deals really surface to the top where I go, hey, I want to participate on that. This is fun. We'll bring capital to the table. We'll bring some relationships. We'll, I got a deep bench of industry contacts that I can help kind of supply to that side of the table. And it's been a lot of fun. So it's been a way for me to scale and grow my own personal portfolio as well as bring investors in along with me to it. So and that's also been the way that I've gotten into a lot of different assets. It's like, okay, well, I can do this and it doesn't add an enormous administrative burden to me. So there's a couple reasons for that.
Yep. No, I love hearing that. And that's one of the cool things about real estate is there's so many different, each type of, each asset class is its own business model. You have to learn how it works. It's all real estate. They all generally work similarly, but each one is kind of something new to learn, something new to experience. And so once I saw that you did pretty much everything, I thought that's pretty cool.
Right. Yeah, it's been fun. But again, for us, laser focused. Right now, I mean, I'm not, and some good opportunities have been sent to me. It's like, hey, we got this awesome deal in XYZ city. I'm active. I'm the active operator in the RV park and boat and RV storage space, and that is all we are focusing on now.
Yep, it's a good place to be. All right, I took a peek at the clock. We have gone through our time, so I got to push us into the quick question round. Are you ready?
Let's do it.
All right, starts out with education. I'm a big bookie, so give me two either book recommendations or any form of education you like, podcast, YouTube, whatever. Two recommendations, one for general life wisdom and one for real estate.
Yeah, Henry Hazlitt's Economics in One Lesson. It's a great book. It will teach you the basics of economics. It will profoundly upset a lot of the economic theories that are thrown out there today, and it's easy to read. It's written. A lot of economics books are just, way over your head, way over my head at least. I'm not too smart, so that's a good one. Love that. Economics in One Lesson by Henry Hazlitt. Cool. And then, gosh, a second good book to read. You want a real estate book?
That could be your real estate. Give me a life wisdom one.
Oh, well, I was going to say, that's not really a real estate book. It's just an economics book.
Okay.
But a life or a wisdom book, man, I don't know. Shoot, I mostly just read business books. I hate to say it.
That's all good.
Yeah, but the other one I'd say that's really an intriguing read is in the kind of psychology of an investor. It's called Mastering the Market Cycle by Howard Marks. And you read it, it's more written as a psychology book than it is a market book, but it's written through the dynamic or through the eyes of what investors do in certain market cycles and why they do it. And he kind of just breaks down piece by piece how the investor does the completely wrong thing at the completely wrong time, almost universally, almost all the time.
That's me in the stock market.
And exactly. And that's the perspective he's written it from. So it's really an intriguing read, and it helps me kind of frame the conversations I have with investors, because it helps me understand how fear and greed motivate people throughout these cycles. So anyway, there you go. Read it for yourself. Mastering the Market Cycle by Howard Marks.
Perfect. I love it. Economics in One Lesson and Mastering the Market Cycle. Good recommendations. I'm going to have to pick them up. All right, moving on. Next one is for your younger self. So if you go back to the Sam who had no experience in real estate, maybe you just saw that auction, you're thinking, shit, I should buy this. Go back to him, look him in the eye, give him one piece of advice moving forward.
One is I probably starting out, I assumed I had to have all the money. I was embarrassed about the fact that I didn't have enough money to float all my deals. I remember telling somebody that in probably 2014. I'm like, we can only buy one at a time. That's really all the funds I have. Wish I had more. And I was kind of ashamed of it. And now it's like, yeah, man, there's not a chance in the world I have enough money for all these deals. That's why you're here. You're the investor. You're bringing capital. We're going to go make a pile of money together, but there's not a chance I can do it alone. So it's a team sport. And I think that's one thing that I would have just really hit home a lot sooner was that, get over yourself, dude, and go start telling me what you're doing, because you're going to need a lot of investors.
Preach it, man. I love that. It took me a while to realize that too, that you don't need the money. If you don't have, $10 million in your bank account, it's okay. It's okay. Go find the deal, go operate the deal. You can bring value in other ways than the money. So
100%. I got a deal right now that my net worth it's not high enough to get it across the finish line. I got to bring a loan guarantor on. You know what? I called the loan guarantor. He's like, sure, 10% of the GP, and I'm happy to sign on with you.
Done. Let's do it.
Done. It's a win. Let's go.
I love it. All right, moving on. Next question is, I lost my place. I do this every time. All right. So the United States, big place, many places to invest. So give me one area that's not your backyard that you're most excited to invest in today.
The Smoky Mountains.
Smoky Mountains. Where is the Smoky Mountains?
Where's this? It's the most national park in the whole country. Smoky Mountain National Park is in East Tennessee. Runs into the Carolinas.
Tennessee. Okay. I love it.
Yeah. It's not my backyard because that's 7 hours from Memphis. Okay. Tennessee's a wide state. So that's a cool place. Lots and lots of people heading there. The activity is really intense. And so looking heavily in that region.
Cool, man. I love it. And I had heard of Smoky Mountains. I just couldn't place it. So,
all good, man. All good. You're a few minutes from the Smoky Mountains. So you're forgiven.
There you go.
Excused.
All right, next question. This is opportunity for you to brag a little bit because we are all gifted with strengths. We all come into this earth, something that we can give the world. And so what is your Superman strength? What are you exceptional at?
Execution. So I can execute, and I probably just have the ability to keep going when others quit. It's a fault as much as it is a strength. It cuts both ways. It's like
your greatest strengths are also your greatest weaknesses usually.
Oh,
so that
man.
makes sense.
Yeah, there's been a few times I should have quit earlier than I did, and I'll just keep on going. So, if it weren't for that, I run a daily real estate podcast, 365 episodes a year. And if it wasn't for that, just like keep going, even though it hurts attitude, I probably would have cut that back to, maybe weekly or something to that effect. But yeah, there's stuff like that just keep on going, man. That's all you got to do. We call it putting your head through a wall. And that's it. Keep moving.
I love it. Execution. That's something that you really need in real estate. I feel like, especially real estate, you need that bone that just doesn't break when you hit that wall.
Yep.
And that takes us to the very last question. You've given us a lot of good advice, so I'm sure people want to reach out and say hi, get in contact with you, learn about your RV deals. So what is the best way for people to reach out and get in contact with you?
2 ways. One, you can call me at the number on the screen. That's my cell phone number. Direct line, 901-500-6191. The other thing I would recommend is going to my website, Bricken, Bricken, investmentgroup.com. So that's brickeninvestmentgroup.com, and download the checklist I put together there, which is a free checklist for how to vet a deal in 10 minutes. If you're a passive investor, I spent a ton of time reviewing deals that I had no business being in. I'd spend hours poring over the deal deck, looking at this, asking the sponsor questions, and come to find I'm like, this just doesn't fit my style. This will help you cut out a lot of that nonsense and really boil down the things that you're looking for in a deal very, very quickly. So yeah, go to brickeninvestmentgroup.com/checklist.
Perfect. I love it. Bricken Investment Group /checklist. I will put that URL in the show notes. So if y'all want to get in contact with Sam, download that checklist. Go ahead and click a little more in the description. It'll pull down the full description. In there, you can find the URL. So that wraps it up. Sam, thank you very much for hopping on the show.
Gabe, thanks for having me. Certainly appreciate it.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.